From comment on one of Africa's oil-producing nations to the next, having heard from the Central Bank Governor of Nigeria, Lamido Sanusi, who's currently at the African Development Bank's annual meeting in Ivory Coast. We've just gotten some insight into the playing field of the financial arena over in that territory at the moment. Margin lending really in the spotlight, but this in a context where we also have most Nigerian banks continuing to hold on to credit. With that, some companies have begun to look outward for cheaper sources of finance. And Olu Abayomi Sanya is the Managing Director and CEO of Goldbanc Management Associates. He joins us now with more detail. Olu, thanks so much for your time this afternoon. Well, first and foremost, what are we really looking at when we talk of banks' credit to the real sector being affected by the reforms that we've seen in the banking arena?
I think basically what has happened, most banks have been very careful, and they have not been able to come up with a kind of a model they want to apply since the reform has started. I think what Sanusi has actually emphasized is you must be on top of your risk, and you should be able to actually manage them well. And what we have seen is that none have actually come up with a full proof whereby you don't just throw away the depositor's money or manage it in a reckless manner. And that's why I think you have had a kind of look and see attitude, so to speak, before we now go into lending. I think that's what has actually happened.
Well, in this context, then, enter the opportunity for many exotic financial instruments. To what extent are we seeing a filtering through of other options here in terms of products that businesses can use to raise capital?
Yes, good question, though. Before now, we have a dearth of financial instruments to actually propel the economy. And I think these are one of the areas we need to look at. If you have to follow what Basel II is actually saying, that none of those kind of things have occurred in Nigerian economy. And to that extent, there's a compelling need for us to actually look at other financial instruments that can actually help the market grow. We're talking of real estate investment trusts. We're talking of asset-backed securitization. We're talking of so many other options that you have there. And none has actually, those windows have actually not been explored as we have now. What we have in Nigeria basically is basic banking, lending and taking deposit. Yeah. We don't have creation of new financial instruments that can go into the capital market and raise a long-term form.
Well, sitting amongst those options to raise capital, Olu, I mean, we've got bonds with options that sits amongst the list of options that are available at the moment. Let's look at that specifically and whether or not we're seeing some degree of eagerness, at least, that wasn't there before pre-crisis, but more importantly, pre-banking reform as well.
Yeah, I think with the current banking reform, you are forced to look elsewhere, and that is why some of us who are investment banking capital market, we're actually looking outside to find options whereby you can fund these companies at even a better rate. During the regime of double-digit interest rate, what happened was that quite a number of these banks were not lending, except you can take those double digits. But we said no, there are options out there which you can actually go for. And we came up with this kind of instrument, which is also a derivative, if you like, called the bond with option. And this bond with option, what it basically does is that it consists of a bond element and also an option element. With the option element, it's more of an equity type that you can actually convert this bond or whatever option therein written can be converted into equity. And that brings in cash into the company, and whereby they're able to utilize it on a long-term basis. I think what has happened also, it's there are no long-term funds in the system, and for you to operate well, you need to have a long-term fund in the company.
Well, we can see what the attractive force would be, of course, for the Nigerian firm, where they'd have access now to capital to grow the business. For the offshore investor, one would assume it means them investing in a firm with potential for massive growth moving forward, and so profit for them. Spelling what exactly for local banks, though? I mean, what is your opinion on that and the impact options like these are going to have on the lending businesses moving forward?
If I get your question correctly, I don't think there will be a shift per se. I think what the banks will do, from what I do know, will be to be more constructive, to be more painstaking, to be more articulate in what they want to do within the system. Basically, you've had in the past a kind of easy banking whereby you just go for the deposit and you lend to the people or you lend to yourselves. I mean, those are one of the reasons why Sanusi is emphasizing on corporate governance. And to that extent, once we can uphold what he's trying to do now, I think they'll be more serious in what they're supposed to do in the system.